Hello, everybody. Tony here. US stock markets closed lower on Friday, led by tech stocks, whose earnings have been solid but not strong enough to drive the NASDAQ higher over the past fortnight. Additionally, investors continue to cautiously monitor President Trump's reshaping of the FOMC board, sparking concerns over the Fed's independence. Looking ahead, the key data point this week is Friday's non-farm payrolls labour market report, which is expected to see the unemployment rate move higher to 4.3%, which should be enough to see the Fed cut rates on September the 17th after the dovish pivot at Jackson Hole. Let's take a look at the charts of the S&P 500 and the NASDAQ at the start of this new week. So once again, we'll start with this NASDAQ chart on the weekly timeframes. And what you can see is 3 weeks ago, we tested this trend channel resistance coming all the way back from October 2022-ish. And we have then had two lower weekly closes. You wouldn't say they're convincingly lower, but certainly we have started to back a little bit away from this trend channel resistance, coming in currently at around 24,000. That said, we are still finely balanced. And if we were to see a deeper pullback, you could see this easily come back towards 22,000, the highs from late 2024 and the high from earlier this year without too much of a stretch of the imagination. And what we need to be mindful of is that, as I said, the jury is out. We haven't seen a significant retracement from here or a rejection of this level. Neither have we pushed higher on above this trend channel resistance. So we'll be watching very, very closely some levels on the daily chart. Now, the one which I would like to draw your attention to is this potential wonky head and shoulders top here. This is the left shoulder, this is the head, and this is the right shoulder, with the neckline coming in roughly around 23,100-ish. So a close below here, it could start to cascade lower, initially down towards this low we saw back in August. But as I mentioned, back towards these lows we saw at the start of this year. Now, if for whatever reason the NASDAQ was to push above 24,000, probably a good sign that the pullback we've been waiting for has once again been delayed. However, when you look at the S&P 500, there's some interesting developments there, which probably lean me in favor of the more bearish scenario I just mentioned, the pullback scenario, I should say. And the reason for that is you can see this weekly candle which formed in the S&P on Friday, a new high, closed back where it opened, signifies a loss of upside momentum. Additionally, it's coming from ahead of the equivalent trend channel resistance we just looked at in the NASDAQ. That comes in at this point of time around 6550-ish. So while the S&P on the weekly chart remains below 6,500 to 6,550, there is, to me, the risk reward is favoring a pullback potentially towards 6,250, which are these lows here coming around 6,250 to 6,200. But you could also, given the magnitude of this rally, it wouldn't be a big stretch of the imagination to see that pullback develop just a little bit further. So keep an eye on these levels we've highlighted on the weekly chart. I still think they're the timeframes which are dominating. You have seen the NASDAQ stall at this resistance level on the weeklies. You've seen the S&P now also just start to retrace away from that. Now we need to see some downside follow through into the early part of this week to signify that we are on the right track and that a pullback is underway. There is obviously a very clear level where we are wrong, above 6550 on the S&P. And if we go back to that NASDAQ chart on the weekly timeframes, above 24,000, well, you would probably say, as I said, the pullback has been delayed and it's upwards and onwards. Thank you for listening and have a good week ahead.